Hey, it's Steve Ryder with Keller Williams and Ryder Realty Group here today with more real estate conversations.
And this is Genna with Supreme Lending, taking the emotion out, and let's talk about some logical solutions in today's market.
I like it. Let's do it. So Genna, with the rates the way they are today, a lot of folks are hoping that they're gonna come down.
Mm-hmm.
So when is a good time to refi?
That is a great question. There is one, let me make sure that I'm clear in the fact that nobody knows what to expect with interest rates.
Right.
There's a lot of moving parts.
Even the Fed doesn't know.
The Feds most certainly do not know what to expect with interest rates.
Right,
okay.
Right.
But that is a customizable question. Okay. Because really, in an ideal world, the best time to refinance is when rates are at the lowest. Okay.
Agreed.
But rates drop a lot slower than they go up.
Mm-hmm. Just like gas prices.
Mm-hmm. And you never know when you're at the bottom until they start going up, right? So really the key to when's a good time to refinance is, when is it a good time to have a significant enough impact in your personal finances to make it worthy of your time. Okay. And that kind of rolls into a couple of tools that we have here at Supreme that really can help people start to see a picture of the refinance opportunities in the future. Okay. So one of the things that we offered in the higher interest rate environment is the ability to come back to us if you utilize us for a purchase now. You have to wait a minimum of 9 months. That's the only requirement. But you can come back to us with a refinance, and we waive our origination and processing fees in that refinance cost.
Oh, wow.
Okay.
So basically a no-cost refi.
A
low-cost refi.
Low-cost refi.
Low-cost
That's
refi.
the big kicker, is it's not a free refinance. There are still other third-party fees that have to be covered, closing attorneys, setting up your escrow, insurance, taxes, all that good stuff.
Right.
But it is a low-cost refinance where we at Supreme are waiving our income that's generated out of the refinance.
Okay. All right.
Okay. And part of that is we have a system where clients can opt in to be notified. And what will happen is, once the interest rates have dropped 1 full percent, whatever they closed at. So let's say that they close at 7%, then they will receive a notification once the rates are at 6%.
Okay, so that threshold, is that a company threshold, or is that a threshold they set?
That's a threshold that we set, where it, like in our CRM system, we have it where, client was at this interest rate, closing this date. We're going to start notifying them once the market rate is a full percent lower.
Okay.
And it doesn't necessarily mean that that's the ideal time to refinance. It means let's start having the conversation.
Correct.
And let's look and see if this is something that's going to be of value to you at this point in time.
I normally tell people, and this is based on information that I've gotten from you and other loan officers, that it's a good time to refi when rates drop 1 to 1.5%. Then you start thinking about it, because that makes an impact in a significant impact in your monthly payment.
Exactly. And again, numbers help take the emotion out and help us lead with logic. Right? We're part of the formula of what your loan officer should be helping you determine as a consumer is, my refinance is going to cost me this much. Again, what's my break-even point? Where, I refinanced back at 3.25%. But after I refinanced, rates dropped a little bit lower, where I could have probably refinanced into the 2s.
Yep.
But in that scenario, I would have risked, there would have been money lost on the refinance that I had closed. We still saw significant benefit. And we knew that we had to be in that mortgage for 4.2 years to recoup our investment back of the cost of the refinance.
Right.
So it's all about working the numbers and having someone to help you chew on those numbers to understand what they're meaning.
Yeah, and I think a lot of times too, people don't understand that portion of it, is how long is it going to take. They don't understand that it's going to take them a while to recoup that once they refinance, because there are costs involved in that. They don't understand and they don't think about that. So what I tell people is, or the first question I ask is, when they ask me, should I refi, how much longer are you going to be in the house? right?
Oh yes, that's always a fantastic question, is how much longer am I going to be in the house? If that, and breaking down the cost. Now look, if your rate is dropping from 7% to 3%, then your break-even point's going to be much shorter,
Absolutely.
right? Where it might be of benefit, even if you know you're only going to be in the home 2-3 years to go and refinance.
3 years, right.
But the math helps determine those factors.
Right.
Where instead of looking at media or looking at your current scenario and making an emotional reaction, I'm a huge advocate of talk with a mortgage professional, have them help you break down the cost versus the benefit of the scenario that you're looking at, and understand the decision that you're making from a numbers perspective will help you take the emotion out of it to help determine when's the perfect time for me and my family to refinance.
Right. And I think a lot of people, that gets lost on a lot of folks.
Mm-hmm.
You know, whether they're looking at just the numbers, or whether they're looking at, okay, is this a good time for me and my family,
Mm-hmm.
or looking at both of them. Whatever they're looking at, I think it gets lost sometimes on them is you know, when is the best time, and they need to be educated. Like, that's what we're talking about, is
Mm-hmm.
educating people as to, you know, when it's time to buy or when it's time to refi or whatever. That's what we're trying to do here.
Well, and what I can tell is, if that's a concept that gets lost on someone that's trying to refinance, that tells me their lender is not giving them a value.
Exactly.
Right? Because any lender that's talking a client through refinance truly should be having those conversations with their client.
Right. Setting those expectations.
Setting those expectations. I always say all the time, I want for you to know that you can come to me for valid financial guidance in handling the biggest asset of your life, genuinely, without at the end of the day feeling how it's going to impact my career at the end of the business. At the end of the day, that you know that the numbers are the numbers, and how the cost versus benefit breaks even, that's going to really tell you exactly how you need to move forward.
Perfect.